We find ourselves at an interesting point in history, and so I want to share some ideas with you here today. And before I dive into that, if you're not familiar with Centennial Wealth Advisory, we take a holistic approach to retirement planning. So we're looking at everything from investments to income planning, tax planning, estate planning, insurance planning, and sort of how all those different pieces come together. But today, I really want to focus primarily just on the current interest rate environment. As recently you saw the Fed drop the interest rates, and so want to talk through what that looks like and maybe offer some potential solutions for you to be considering. As we look back at history, we can sort of see where CD rates have fallen. So going back over the past 7 or 8 years here, you can see that we were at a point not too long ago where really CDs weren't paying a whole lot of interest. And then we had sort of a peak there as we saw in 2023 into 2024, where some folks maybe were seeing upwards of 5% on CDs when you look at more like high yield or higher interest earning CDs. Well, you maybe started to see now with the Fed dropping interest rates and the way the interest rates have moved, maybe those are starting to drop a little bit. Along with that, you want to look at ultimately what have the returns looked like in different asset classes following different money market asset peaks. So as you can see on the visual here, we're upwards of over $7 trillion as of the mid-year point in 2025 of funds that have been shifted over to money market assets. And then you want to look ultimately at, well, how have stocks returned following these different peaks? And what about money market? And what about U.S. bonds? So these are all different options of what path you can go down when you have maybe these excess funds that you've built up in a money market that maybe you're getting a little bit higher interest, but maybe you're starting to see those interest rates drop. And so that brings us to another alternative for you to consider when it comes to different types of accounts. So as we walk through these, I'm going to share with you, these are through different insurance companies. So you have different options within these types of accounts where you might have, they'll call them multi-year guaranteed annuities. So one of those currently that's offered here as of late September of 2025, where it's currently 3 years at 5.25%. I'm going to put a big disclaimer out there to say that interest rates are subject to change. So it's one that, again, there's a lot of different options out there, but they're going to have some restrictions. As I mentioned, 3 years at 5.25%. You might be limited to only accessing the interest earnings after it's accumulated for 30 days. You also may have different minimums associated with these types of accounts. It might be $25,000 as an example. And maybe you want to go out a little bit further and look at a 5-year account option, and that might be closer to 5.5% with some of those same rules. Again, there's a lot of different types of accounts out there. Another alternative might be 5 years where it's tied to the S&P 500, but you have principal protection. So this is called a fixed indexed annuity. So this, you don't have any risk exposure, but you have the potential, again, as of the date of this filming, it was offering upwards of 10% of what would be a cap on an annual basis. So if the S&P 500 for a 12-month period you were invested went up 15%, you would be limited to 10%. But if the S&P had a negative return during that 1-year period, you would just simply earn nothing. You would stay at the same value. So again, 100,000 minimum might have a cap at 10%. For $25,000 minimum might be a cap at 9.25%. You'd want to consult a licensed professional to talk through these different types of account options. As we go back over the more recent history, we can see with the S&P 500 what the returns have looked like on an annual basis. And we've had some success in the market as of late. And so again, these types of accounts in fixed indexed annuities, as we look over the recent past, have seen some reasonable returns without any risk exposure. So again, something that you may want to consider when it comes to your overall retirement plan. We welcome you to give us a call at any one of our offices in Traverse City, Gaylord, Petoskey, Cadillac, or Manistee, and we'd love the opportunity to just sit down and have a conversation to discuss opportunities to help you plan to retire well.